Here we go, looking at good old Twitter. Twitter stock today, worth taking a look at. Just reported earnings after hours. You see, as a result, the stock went up 1.5%. Saw a little bit of more movement, closer to 2.5% in the early after hours trading session. So pretty exciting stuff. Pretty much mostly positivity after hours too. You typically see a lot of jaggedness with earnings lately, but pretty positive in terms of that. So let's take a look at these results and see what we got going on. We see a non-GAAP EPS line of 38 cents, which is beat by 7 cents, and a GAAP EPS line of 27 cents, beats by 11. So a good profitability beat there, obviously, for them. The profitability line as a whole is not quite necessarily where I may want it to be out of this company. I think they could do a lot more, but that's neither here nor there. It's a good beat, but yeah, it was kind of expected with what's going on here. Revenue line at 1.29 billion is an increase of 27% year over year. Is a beat by 100 million. Now, again, a beat is good, but I hate to say that I feel like I'm slightly disappointed with these numbers from them. I think you should expect a little bit more out of this company, only making $1.2 billion, obviously. I'd expect a little bit bigger of an increase when you get their competitors posing much bigger increases year over year in terms of what they're doing. So I think that's one worth mentioning. You should expect how I thought this should have been a blowout quarter, should have been a lot more of an increase, over 30%. But there's definitely some big growth to look at, because you see as monetizable daily active users came in at 192, which is an increase of 27%, but the consensus was 193.5 million. So kind of disappointing that the daily active user line did not hit estimates. And for me, I'm surprised this stock did not go down because of that. Because a lot of these companies right now, people are really just looking at these user metrics, and that's what they're judging them based off of. So I'm shocked this one did not have the same judgment by people, but overall good numbers, and I think that's what outweighed it. For the first quarter, they're expecting total revenue between 940 million and 1.04 billion, and GAAP operating income to be between a loss of 50 million and break even. So not expecting profitability next quarter at all even is pretty disappointing. I don't know. Personally, I just think that's not beautiful. I think I'd expect more out of them. Obviously, you want profitability. I mean, this company's been in existence long enough. They should be at a point where they're bringing consistent profit in, and not a line like that. Yikes. Yeah, crazy stuff. Some finer details here. Better than expected performance across all platforms and geographies. This is the CFO. Total ad revenue was up 31% year over year as expected. Nothing shocker there. And there was greater than 50% growth in mobile application promotion revenue. I haven't been on Twitter in forever, so I don't know much about this stuff. Net income jumped to 222 million from a year ago. Income of 119 million. So nearly doubled that year over year. Is pretty nice in terms of this net income line. You just hope that they'd be able to do it every quarter, in my opinion. Daily active users obviously did not hit the expectations. Monthly daily or U.S. daily active users was at 37 million, up from 31 million a year ago. And international came in at 155 million, up from 121. So definitely some good growth there still. Net cash from operations 330. And obviously we saw that quarter one guidance as well. So pretty cool stuff. We do have a press release to look at. See if we can find some more details. I mean, obviously the overall, I think, sentiment of this was positivity because of just the numbers themselves. So yeah. As far as a full year here, because obviously this is the fourth quarter, for the full year, they only increased revenue 7% year over year. For me, this is a little bit of a disappointment. Ad rates fell quite a bit, obviously, in the first quarter and a half for them. There's no doubt. but they should have come back stronger than ever and seen more of an increase than just 7%, if I'm being honest. Their competitors certainly did more than that, so I think that is, cause for people to be, to at least ask a question. So the net loss on the year was $1.14 billion. That's crazy. I mean, you hate to see it. You don't want to see a net loss line that bad. $1.14 billion lost this year. Son of a gun. I mean, you want to see some more profitability in that aspect. It's just losing $1 billion for a company in this really the life cycle that it's in. It's crazy to see. You'd expect a lot more, but again, they're expecting, a lot of that was due to expenses by things that happened in 2020. So I get it, but you'd expect. I personally would expect a little bit more. As far as just the quarter itself, ad engagement increased 35%, and cost per engagement decreased 3% year over year. Nothing too crazy there. Not at all. So quarter four costs and expenses totaled $1.04 billion, which increased 21% year over year. So a lot more in terms of cost and expensive. A lot of because user growth, obviously, you'll see more cost and expenses. Keeping the platform operating, especially with different programs right now that they have set up as far as monitoring content. So makes sense. Obviously, we saw that net income line and the daily active user line as well. We saw the outlook. Nothing crazy. For the full year, they're not giving a full outlook either. I would say it's worth looking at this balance sheet too. Obviously, this year sounds like it wrecked the balance sheet, but who knows? Who knows? We'll have to look at it and see what happened. Total current assets on this company, thankfully it's a year-over-year comparison, sitting at $8.6 billion compared to $7.6 billion of the year prior. So good, nice thing there. Short-term investments saw growth. Total assets in general of $13.3 billion compared to $12.7 billion. Not much of a change year over year, all things considered. So nothing too crazy. Current liabilities sitting at $1.9 billion. That compares to $800 million of the year prior. It's not a shocker, but a lot of that, again, is an increase in these convertible notes that they use to raise capital. That all really came up for expiration now. A large portion of it, $900 million of that. Long-term debt, total liabilities in general, I guess, $5.4 billion compared to $4 billion of the year prior. So definitely they increased liabilities by more than they did in assets. You see stockholder equity fell to $7.9 billion compared to $8.7 billion of a year ago. It's not the right direction you want this company to be headed in, but I think there's reasons, and you can justify it if you want to, as far as the challenges that they faced last year. But in my opinion, there were less challenges, and frankly, it was more of a beneficial year. I would have liked to see some better improvement here from this company and what they're doing. If I'm being honest, I want to see that balance sheet grow this year, and it really didn't see much change. Really, you only saw a decrease in stockholder equity. I would expect to see more personally. And again, you need to mention the company's trading at a market cap of $47 billion, not profitable, regularly, and bringing in annualized revenue of $6 billion. It's trading at relatively high valuation, in my opinion. And if you look over the full year, this company's also seen a 65% increase, 66% increase, which is a lot for a company that really hasn't done more. I'd expect them to do a lot more last year. That's my opinion on the matter. I just really expected a lot more out of this company and what they were doing. That's all I really got for you today. I don't think I'd buy this stock really because the valuation just isn't there for me. But still, hope you enjoyed this one and you have a good day.